if you're largely playing on operating efficiency, someday you become the cost for the bank. So in B2B, trust is a very, very important factor. I give a lot of credit to my investors because if we had not put in this kind of capital, right, our ability to really scale would be a bit more challenging. Innovation is definitely a good to have, but not at the cost of scale.
You know, Gaurav, this also feels one of the very counterintuitive bets you've taken. Again, you're going after fixed income products.
We will always acquire high quality product companies which are not at scale, right? And second is where the founders are keen to co-build with us. I don't think, you should end up hiring a lot of people, especially in the leadership group, very quickly.
Do you think that at a certain point, majority of Yubi would be AI focused? Hey Gaurav, welcome to Lunchbreak with Lightspeed.
Thanks a lot, AJ, for having me.
I know you don't do these often, so thanks again for making time to do this with us.
No, my pleasure. Thank you.
No, of course. And you know what, I'd love for people to know a lot more about your personal journey as a founder and how you built Yubi. So maybe we can just, keep it brief and talk a bit about that. So maybe just start with a simple question. Help me understand how you went on to do something in financial services. You've made 3 companies now, 2 NBFCs, and then Yubi, which is one of the largest B2B fintech companies in our ecosystem. So how did that happen? How did you choose to do something in financial services and especially B2B?
I think to start with, it was largely destiny. I think we ended up co-founding Northern Arc in 2007. Those days you hardly saw any startup, and it was very difficult to actually attract talent. And in my view, if I reflect back between 2007 to, I would say 2021-22, as we were scaling up Yubi, I think my own reflection is those days in 2007, starting was difficult, scaling was easy, and now starting is easy and scaling is very difficult, right? So, and given where financial services ecosystem was between 2007 to 2011-12, gave us a phenomenal vantage point around financial services in general. And given the business model, we ended up becoming the first lender to most of the NBFCs, enterprise, SFBs. Also ended up doing a lot of first of its kind structured finance transaction in India. And that, to my mind, led to my own thinking around what we should be doing next with Vivriti. So I left in early of 2017, along with my co-founder Vineet to co-found Vivriti Capital. And then 2018-19, we ended up co-founding Vivriti Asset Management. And I give a lot of credit around Vivriti to Vineet. I think if it was not for Vineet, I would have immediately jumped on from Northern Arc to found Yubi. That was one of the reasons why I decided to kind of step out. But ended up building a phenomenal franchise along with Vineet. And in 2020, I think it was at least very clear in my mind that we wanted to build something around financial services, tech infrastructure. Did not wanted to build something on fintech, and that's what led to Yubi, and then I moved out of Vivriti to set up Yubi.
No, awesome. But tell me one thing, Gaurav. Why financial services? I know you had a humble beginning. You went to IRMA as a college. How did a financial services kick in that I want to go and do something in the NBFC space back in 2007?
I think in general, growing up in a small town in Deoghar, in Jharkhand, I think, and my initial days were a bit different than what you see for others. I had an accident when I was very, very small, around 3 years old, and very remote chance of me surviving, right? Which meant that I did not go to school for my formative years and almost became like a rebel, right? And while I had a lot of other offers from different B schools, but when I went to IRMA, I think it left a lasting impact, especially around what Dr. Kurian had done around impact and scale. And as I was thinking of what I should do with my career, I think it was one thing which was very clear in my mind was that scale was something which was always fascinating me. So if I had to choose something, it would be on the vector of scale and impact.
Very nice.
And financial services, I could see, growing up what access to finance and access to credit could actually do, which was largely transform lives. And that's the reason why financial services, and that too in financial services now for almost 20 years.
Okay, awesome. How did Yubi come up? So you did Northern Arc, which was it has been a very successful NBFC. Then you and Vineet went on to find Vivriti, which again has been a very successful NBFC as we know today. How did Yubi start? Because Yubi started within Vivriti, and then of course you came out of it. So how did that happen? Like what was the turning point when you realized I want to do something on the tech side and help the ecosystem, whether lend better, whether collect better, and so on?
So I think one thing which was very clear, given that we were largely very, very close to the entire evolution of, I would say, lending fintech between 2012 to 2016-17, it was very clear, at least to my mind, that I did not wanted to build a lending fintech, right? And it was, the easier option was to build in Vivriti, right? And have a very large balance sheet to back us to start scaling. But the challenge with lending fintech, and that's why most of them have had their own challenges in terms of scale, is because one side is largely optimizing for risk and compliance, and the other side is optimizing for largely throughput, funnel, customer experience. And most of them start with tech and marketplace, and very soon start giving guarantees, and very soon start thinking about how to underwrite. And then if you look at most of them, I would say have ended up becoming a lender themselves.
Yes.
So where you start with tech as your core moat, and very, very soon, without realizing, get dragged to risk and risk management, which is very different, right? So I was very clear that what the financial ecosystem was lacking was largely infrastructure, right, which could make the lending ecosystem interoperable, right? So if you look at to my mind, the payment system between 2012 to 2017, right? You saw a lot of great companies largely becoming a wallet company.
Yes.
Right. So you still had Paytm, you had PhonePe, you had GPay, but you could transact one-to-one, right? And then 2017 comes NPCI and makes the entire banking system interoperable, right? And you saw the entire inflection point in payments, and we can all now reflect back and see what UPI has done to payments. Lending, to my mind, was far more complex, because you could not really make bank A exactly similar to bank B and bank C, because every bank had a different cost of fund, which meant that they had to onboard differently, underwrite differently. So my thesis was, what do we do to make the entire banking ecosystem interoperable, right? And then we went ahead to build around the entire holy grail of our own trifecta of protocol, network, and digital banking infrastructure, because we were very clear that unlike payments, protocol is not just the answer.
Correct.
Right? Because we saw some of the frameworks which were largely protocol driven could not really scale up in lending, right? So we said protocol is the starting point, which allows you to connect to the network, but you also needed to have the entire software layer for every bank and every participant on your infrastructure to become functional, right? So that's why we went ahead and built around a protocol, network, and digital banking infrastructure trifecta. And that's what has been, to my mind, the entire thesis around Yubi.
No, it's a good way. I think I'm kind of relearning why we invested in Yubi 4 years ago, and it's been a phenomenal journey being one of your early investors. Now, if I may ask, Gaurav, at the start of this, before we were, prepping for this, you mentioned a funny thing. You said doing this podcast is much harder than doing B2B sales, which I think in itself is very, very hard. How did you crack that? Everyone keeps saying selling in India is very hard. Indians paise nahi dete hain. Indian enterprises paise nahi dete hain. But now you've built Yubi to be almost $100 million fintech while selling to the same B2B clients. How did you crack that? Like, what was the eureka moment for you to realize, I've got the GTM now, I've got the sales motion now, I have the product now? Like, when did all of this come together?
I think, to my mind, the starting point has to be what's your real value prop to banks in our case, right? Because most of our clients are largely banks and BFCs, fintechs. So at least we were very clear that we did not wanted to play on operating efficiency, right? And one of the reasons why you hear that from most of the companies and founders that banks don't pay is because if you're largely playing on operating efficiency, someday you become the cost for the bank, right? So you come inside the bank thinking that you are actually bringing in operating efficiency, but your own revenue actually becomes the cost of the bank, right? So we were clear that we either wanted to play on really the profit pool of the bank. How does the bank lend better? How does the bank actually scale? And second is, how does the bank really manage their risk better, right? Which was largely our play on collections and credit underwriting, risk management, right? So the value prop was never to be on the operating efficiency side, but largely on profit pools and credit risk. Second, we were very clear, and when we were starting in 2005, a lot of folks who were looking at us from outside, their feedback was, why are you guys going and becoming horizontal very quickly, right? Because a lot of the thesis was around be a vertical, scale in the vertical. But we were very clear that we were servicing banks and financial institutions who are largely horizontal, right? So the same bank is actually servicing a client, and within that they are servicing client across products, right? So unless and until you are actually playing throughout the life cycle of a bank or a client, it's very difficult for you to scale, right? And third was whether you wanted to go in with a SaaS thesis or you wanted to go in with a deeply integrated thesis, right? Because once you get in, how quickly you can actually enable the second product, the third product, the fourth product for the bank, right, was to my mind the core, right? I think these three frameworks for us, ensured that we could actually scale with a bank or a client when we got in, right? And then the rest of the sales and GTM motion actually followed, right? In terms of how do you, once you get into an account, how do you do land and expand? My big learning, I think, also is because I have been in this space now for 18, 19 years. Our clients have also in some shape or form seen us building our past startups. I think 2-3 things have also played out, because when you look at Yubi, we are 4.5 years old, but I keep reminding my team that we are 17, 18 year old, because a lot of clients in the ecosystem has implicit trust. So in B2B, trust is a very, very important factor, right? Whether the client really trusts you or not, your product might not be there when you start building, right? But you end up co-building a lot with your clients. The second important aspect is your ability to actually really, really scale with your customers. So how do you really strike a balance between innovation and scale? And that's where I thank my investors quite a lot, right? I think, as I said, my first startup was largely right place at the right time. And I think Yubi also, in a sense, right place at the right time, given what was happening between 2020 to 22, especially in the middle of COVID. We ended up raising a lot of capital, right? And it was completely an antithesis saying, you are largely a B2B company. Why are you going ahead and raising so much of capital, right? But
I remember during the first Series A round, that was a big question.
Yeah, and we ended up doing the largest Series A, and then followed by Series B, and then I have ended up investing myself close to over 300 odd crores, largely because of 2-3 reasons, right? I give a lot of credit to my investors, because if we had not put in this kind of capital, right, our ability to really scale with very, very large counterparts would be a bit more challenging. We would not get to this kind of scale in 4 years of what we have got. Because working with banks, I think the feedback from banks is that tech companies and fintechs were very good at innovation, but they were not good at innovation at scale, right? And whereas banks were largely looking at innovation was a good starting point, but what banks were looking at was largely scale. Banks were looking at your ability to invest in core infrastructure around InfoSec, right? So a lot of our investment has actually gone in building those foundational pieces, which has allowed us to really, really work with the largest banks in the country, right? So I think striking a balance, if you are building B2B in this country, where you are more obsessed about scale and what your client needs from a scale perspective, innovation is definitely a good to have, but not at the cost of scale.
I was going through our investor memo back then, our first board meeting pack. Over the last 4 years, one thing I realized is you've built Yubi in a very counterintuitive way. You've taken a lot of calls that many times, even in board meetings, or I'm sure your employees and customers would have said, this may not work. And in hindsight, majority of those calls have worked. How did that happen? Like, for example, you went into fintech, but not into lending. You went into software and the interoperable stack, right? You kind of built it full stack. You did not go vertical fintech. You went to horizontal fintech. You've built collections, we have data, we have now AI tools coming up, we have co-lending bonds. Was that on day one, did you know that this is the only way to go about it, or was that a journey that you kind of arrived at the answer?
I would say it's a combination of both, and I think you made a great point. I think when we started building out in 2020, right, I think there were few pieces we were very clear sitting in 2030 or 2040, right, what should not change, right, because we could only control what should not change. Rest of it, is not in your control, will keep evolving. So we were very clear that we definitely wanted to build largely a loan operating system, right, where we could actually sit deep inside the bank. So very clear that we will not build SaaS. We wanted to build a deeply integrated business which is sitting deep into the core banking of banks, right? We were also very clear that we wanted to be a horizontal, right? Like you very rightly said, because our clients were horizontal, right? And even some of our investors and some of our board members, of what we have seen playing out largely, for example, in Valley companies in the US, the market is very deep, right? So you could actually end up building in a vertical and end up creating a disproportionate outcome for yourself. But in India, the market is deep, but it's deep at a pricing point, right? And hopefully with every passing year, the market is becoming deeper and deeper, right? So we were very clear that we wanted to be horizontal because your clients were horizontal, right? And the market was deep, but you had to also stay with the market to become deep, right? And last and most importantly, the call which we took was, we said, a loan will remain a loan even in 2040.
That's
right?
true.
So a client will always get credit in form of a loan, where in our mind, even an invoice is a loan, right? A security is also a loan. And that's how we went ahead designing our entire operating system, which meant that we could actually sit deep. So some was our initial thesis, as you rightly said. Some was because we were actually sitting deep and we were not sitting on the surface. We could actually predict much ahead of its time. So that's why you will see a lot of our platforms is a combination of first of its kind, where we have gone ahead building the entire co-lending, we have gone ahead building the entire digital lending, the retail lending stack, etc., where we have been the first to build or the first mover. And then we have also been playing defensive on our wealth tech, where we might not be the first mover, right? Where there's a lot of learning which is going to come in from the existing business. So as a combination of, I would say, sitting deep, ability to foresee much ahead of its time, as well as, I would say, learning of my previous, I would say, startup has also helped in a certain sense.
Understood. Very helpful. Gaurav, you've also used M&A a bit over here, right? And I think you've used it very smartly. I remember, I think 3 years back, we made our first acquisition in the collection space, and we've done a few more bolt-ons after that. A lot of companies I've seen use M&A in two ways, either to enter new geographies or to, consolidate the market. You've used it very differently. You've added new product muscle or new sales muscle. How do you think about that?
So for us, I think, and as you very rightly said, acquisition was never a revenue add-on strategy, right? So our thesis around acquisition has largely been twofold, right? One, we will always acquire high quality product companies which are not at scale, right? From a revenue perspective, right? So they definitely have a good product, right? And second is where the founders are keen to co-build with us, right? So if you look at, companies where we have got into partnership and ended up acquiring, the founders in most of the cases have continued to still co-build with us. We ended up acquiring some of them in, I would say, early 2022, right? I think for us, the critical piece was, what can we do to actually provide these phenomenal founders and companies a great network and GTM, right? Because Yubi, given our thesis, we were already inside the customer, right? And once we got these bolt-ons, given that the product was good, we could immediately give them distribution, right? So I think that to our mind has been very, very key, that identify companies which have good products, right? But have not been able to find the right distribution, right? And where we are bringing in and giving them that kind of distribution along. We are also looking at, companies to our mind in the same thesis and space even as we speak, right? We are not going to look at companies which are large, because I think, touchwood, so far we have ended up acquiring 3 companies and all of them have done very, very well. My own learning is that more than, I would say, the product integration, it is largely to do with culture, right? And your ability to actually work with founders, right? A founder myself, I know, what it takes to start. So unless and until you have a very high degree of empathy for the founders who are coming in and you are giving them the right space to continue to co-build, thinking that just because you are acquiring a company, you will be able to step in that company and start taking over and run that company. I think then that's not the right operating leverage which you will get, right? So when you're acquiring, you're not only acquiring the product, you are also getting the team, and you're also getting a phenomenal founder, right? Who's really in it for the right reason. And to my mind, that should be our playbook as we move forward. We think that, as we build more and more horizontal, we will get good opportunities, right? Where you have exceptional product and the founder is keen to scale. And that's what we will look at in our next playbook as we acquire some more meaningful companies in Yubi.
Gaurav, you spoke about trust, you spoke about empathy, you also spoke about learning yourself as you've gone through this journey. What would you say has changed you as a founder over the last, you've done it 3 times now, but if I may ask, over the last 5 years, what has been the biggest learning? Some mistakes you've made from which you've also learned more, like what would those be? How have you changed over the last 5 years?
I think the biggest mistake to my mind would be not to hire so quickly, right? If I had to kind of redo some bit of our own journey, over the last 17, 18 years, and especially at Yubi, I don't think, you should end up hiring a lot of people, especially in the leadership group, very quickly, right? Because I think it's very difficult for each of them to really come in with a deep sense of the mission, right? And unless and until you have that deep sense of mission, for you to build something when the times are not going to be great, I think is going to be a bit suspect, right? So I think my advice would be, don't hire a lot of people and don't hire quickly, right? Because then building that culture in the initial and formative days becomes more and more difficult for the founder, right? And because you're also kind of thinking of scaling, right? Second is, what is the right balance to really hire for when you're building a team, right? So if you're in a position where you have to scale fast, right, you need to have people who have done the 0 to 1, but also have the muscle memory of scaled up businesses.
Very nice.
Right? Because you will not allow time to the current team to constantly keep learning, right? While it's good to say that, you can fail and you can learn from your failures, etc. But you only have finite time in B2B, right? Because if you're not able to get into a large set of your clients early, very difficult for you to be a challenger, constantly trying to replace somebody who's already gone in, right? So second big piece would be, how do you strike a balance and get people who have that muscle memory of scale and that hustle and the agility and the entire drive to build something which is coming in from the 0 to 1 kind of leadership.
Gaurav, you spoke about drive, and again, I kind of interlinks empathy, trust, drive. How do we ensure that this kind of achievement of excellence, this drive, this hunger, this muscle memory, it translates throughout the organization? How do you kind of ensure that? Because there are, as you said, right, UB now has multiple businesses. We are present all over the country, multiple salespeople, multiple organization levels. How do you ensure that from top to bottom, this muscle memory is built?
I would say in my own learning, 2 things. One is definitely, does your franchise has customer impact, right? I think, a lot of companies are phenomenally successful. I think at least what we're trying to build at UB definitely has a lot of end customer impact, right? Where your ability to enable and change their lives through finance, I think is very deep and meaningful. So a large part of our team is actually driving meaning through their own work, because they see that, happening on the ground on the last mile. The second to my mind, as far as founder and the leadership is concerned, is about communication, right? Sometimes what happens is that, you think that you are actually speaking the same thing and you're sounding like a broken record. But very rarely you will actually see somebody who's paying attention to when you are speaking, right? So it is very important that whatever matters to you as a founder, as far as culture is concerned or impact is concerned, you are communicating that over and over again. Because when you're communicating, not everybody is paying attention to what is being communicated, right? So to my mind, I think that over communication on the top 3 things which you think the team should be constantly listening to and resonating, I think this impact and value to my mind would be the top 2.
Understood. Now, Gaurav, changing gears a bit, right? You've been at it for, you said, almost 20 years now. UB almost 5 years now. Where do you see the next 2, 3, 5 years for UB? We have an interoperable business. We are now present in Middle East as well. Where do you see the business going? What is exciting you? What is keeping you up at night?
I think I'm looking at the next 3 to 5 years on largely 3 vectors. One is what I call as UB 1.0, right, which is what we have built over the last 5 years. How do we ensure that we have constantly the right GTM to keep scaling, right? Because I think to my mind, the biggest learning curve is when you are scaling. I personally feel that your real innovation is scale, right? Innovation is not to build something unique, right? Innovation is to actually scale, right? And that's what I keep communicating to the team, that for Yubi, innovation is scale, not to ship out newer products and newer features every week. So a lot of our focus is going to be on scaling Yubi 1.0. The second is on the, to my mind, Yubi 1, which we call, which is largely taking Yubi outside India, right? And I think we have been pleasantly surprised. I was a bit, in the hindsight, a bit dogmatic 2 years back, given that India itself is a very, very large market and a very challenging market. We were very clear that we wanted to be in India, right? But somehow again, serendipity, we got a lot of inbound coming in from the Middle East, from clients. That's what took us to Middle East. Our Middle East business is scaling up, touch wood, very well. And now in Southeast Asia as well, largely coming in as inbound and now seeing scale. So Yubi 1, which is scaling Yubi outside India, I think you will see a lot of that in the next 2 to 3 years. We think that roughly close to 25% of our revenue can actually come outside India in the next 24 to 30 months, right? And the third is what I call as Yubi 2.0, which is what I define as the last mile AI, right? So currently there is a lot of buzz around AI and what's happening in the financial services space around AI. We are calling ourselves as the last mile AI, right? So I think there's going to be a lot of over-indexation on what we build as the last mile AI, which should give us a good sense of what we can actually accomplish along with our clients as Yubi 2.0.
I think in 2025, no conversation is complete until AI comes in, and I think it's a good pivot to talk about that. What are you building in the last mile AI? Like when you say last mile, is it at internal usage that you're building AI? Is it at a delivery level that you're building AI for your customers? What does AI mean to Yubi?
So for us, I think it's largely what do we really deliver for our clients, right? And I think to my mind, especially if I have to just confine myself to financial services, companies who are building on agentic and will end up building a lot of pieces around AI are largely going to be successful if they are horizontal and are already taking the surface area of your customers, right? So again, point solutions around AI might not be very, very effective, right? So really understanding the depth of your clients, because you're also working with clients who are paranoid about governance and compliance, right? So it is very, very important that you understand the depth of the use case, right? And you are able to actually co-build a lot for your customers around those use cases. So currently what we are defining as last mile AI is building for the client, co-building for the client to help them solve for some of their tougher problem statements. We are largely building around 4 core pillars, right? We are building around voice. We have been below the radar, but today we do close to 2.5 crore voice calls a day. We are very, very large on conversational AI. The second platform is around video intelligence. We do close to around 15 lakh video calls a day, again, fairly significant, cutting across various use cases across banks. Third is where we are building on fraud, right? So using AI both in terms of fraud risk scoring. That is a piece which has taken off significantly in the UAE. So almost 38 to 40% of the retail traffic monthly in UAE actually flows through our UALT platform, right? And the fourth is around what we call as agentic, which is largely again horizontal, which is largely around funnel optimization, management, again credit underwriting, writing credit memos. So these are largely, to my mind, the 4 pillars which have come to us from our clients, and that is where we are building the last mile AI for.
And are you seeing a lot of this use case? You mentioned you're also selling the AI products or the AI service in Middle East as well already, also in India. Do you think that at a certain point, majority of Yubi would be AI focused, or would it be that at the end, delivery stage is only when you are going to see AI penetration happen in our business?
I think in my view is going to be the latter, right? I think because you are already inside most of what the customer's pain points are, right? A lot of your last mile AI is definitely going to bring in tremendous amount of operating efficiency, right? But I would again say that if you're over-indexing just building AI and cool AI as point solutions, I don't think we will scale, right? I don't think we have a right to win as far as point solutions are concerned. So we will largely go domain heavy, right, on where we are already playing. and then use AI to build on top of that and allow the customer to get that kind of operating leverage.
Understood. Now, maybe talking a bit about Middle East as well, very few tech companies in India kind of go global, especially in the fintech world. You've gone to Middle East. I think we've had good success there and a lot more to come. Southeast Asia also, you're seeing a lot of inbound. All of it has been organic. You've not done any acquisitions there. You've not done any JVs there as such. It's been all organic, done by Yubi. Can you just walk us through how you build this taking India to the world kind of story for Yubi? How did the on-ground setup happen? How did you realize that this market could be large? You mentioned you were dogmatic about Middle East a while back, but how did that all come together? And where do you see the next 3-5 years for you outside India?
I think one realization at least is the kind of scale we have been able to get into India. I think that helps us significantly, right? Because once you have built for India scale, right, other countries become far more easier to execute, especially in the B2B setup, right? The second to my mind is the maturity of our product, right? Our products are now much more matured, has seen scale, have gone through very, very critical delivery cycles with some of the largest banks in India. And to my mind, the last point is a lot of the ecosystem, whether it is in the Middle East or Southeast Asia, I think is anywhere 8 to 10 years where India was, right? So I think all of them are now going through rapid digitization, right? Rapid transformation. So I think it's also to do with the timing, right? I think the market is much more ripe now, both in the Middle East as well as in Southeast Asia. I would say more in the Middle East, right? There is a lot of focus from the central bank, a lot of focus from banks to actually invest in tech, right? The ecosystem is also coming along. So earlier you used to see the API ecosystem was not very formative. It's very, I would say, formative and nascent. But now what you're seeing is the entire API ecosystem is also kind of developing in some of these kind of markets. And what now we are seeing is the playbook was very clear that we will only put sales motion, right, once any market crosses $1 million of revenue, right? So our view is very clear that when we entered Middle East, especially UAE, I think we were actually selling from India, right? Once we crossed a certain critical threshold, we knew that we had product market fit. Then we put more people on the ground. We are doing the same in Saudi. Currently, we are servicing Saudi from India, right? We have our first client in Saudi. We have our first client in Sri Lanka. We have our first client in Indonesia. All of these markets we will continue to serve from India. And as we get to the right product market fit, then we will definitely have to put more resources on the ground to then start scaling.
So as per you, the right frame is until you reach critical mass at scale, serve from the host country. And once you've kind of built that, then you have to build local presence. Is that the only way to go about it? Or do you think you can still continue this India service delivery outside?
I think at least in our context, having the team which has actually sold and delivered your products, I think is very, very critical in a new market. Because in a new market, you have a new team, their own understanding of the product, their own understanding of delivery cycle. You're putting too many balls in the air, right, for the team to drop, right? I think it is very, very important that at least as far as product and delivery is concerned, right, for the first 1 year, that support is coming in from team which has done it already multiple times and at scale. What the local team is bringing in is the local cultural nuance, understanding of the market as far as GTM is concerned. So if I have to kind of slice it, I would say GTM slightly more locally after 12 months, but product and delivery to continue from India. That's been our playbook.
So, Gaurav, you've built 2 NBFCs, now you've built a B2B fintech. In just 5 years, we are $100 million at scale, which is just phenomenal in its own way. You've taken Yubi from India to Dubai. Now we are also seeing traction in Indonesia and Middle East and Singapore, and you said Sri Lanka. But now you also started a new segment, which is a consumer-facing wealth. Can you walk us through that? How would that be different?
So largely, AJ, to my mind, our playbook as far as the entire securities business is concerned is pretty similar to what we have been doing at Yubi. So there are 2 components to what we are trying to achieve in the wealth tech, right? But taking a step back, I think why we are doing what we are doing. I think in my own learning, right, coming from a small town, what I have seen is that the high quality investment products are largely now available in metro cities, right? So growing up in small town, I see 2 key issues. High quality product is not available, And second, high quality advice is not available, right? Because talent has already left those towns 10, 15, 20 years back, right? So that was the trigger to think about what we wanted to do in the wealth space, right? And that led us to really think through two companies within that. One is Yubi Markets and second is Aspero. Yubi Markets, again, think of us like building tech for everybody in the ecosystem, which has been our thesis at Yubi. So whether you are a wealth firm, you are a MFD, you are an IFA, you might be in Jaipur, Coimbatore, does not matter. We build your tech infrastructure.
And will this also be interoperable?
That's correct, absolutely correct. We build your tech infrastructure, we provide you the entire settlement layer, and also we provide you the entire fulfillment layer, right? So you don't have to build tech as far as the wealth ecosystem is concerned, right? And all of them are deeply integrated. We are integrated with exchanges on this side, plus on the other side of the community. That piece is today again horizontal. We, as you rightly said, we started with fixed income and bonds 2.5 years back, but now we are in fixed income, bonds, rates, InvITs, mutual funds. So completely full stack. Again, same thesis. Our customers are largely wealth, IFAs, etc. They need full stack products to service their customers. Right. As far as Aspero is concerned, we are India's largest regulated online bonds platform. We are roughly 21-22% of traded volumes of BSE, NSE.
Wow.
Right. And the key there is, again, how do we ensure that we are actually doing that market penetration? So what we have done is in the initial 18-24 months, we have not really gone marketing heavy to ensure that we are scaling that business. The larger focus has been again on B2B2C and B2B. But what now we are seeing is there is a lot of organic love which is coming in from customers directly. So there is a lot of word of mouth, right? And we are now seeing a good amount of traction kind of coming out of it, right? Which again, the thesis will be the same there. How do we get high quality product and high quality advice to everybody who is genuinely coming into the new to wealth space, right? So we are not playing in a space where largely going after the incumbents, largely focusing on customers who are either in tier 2, tier 3 towns, or customers who are largely coming to what I call as new to wealth segment.
Gaurav, this also feels one of the very counterintuitive bets you've taken. Again, you're going after fixed income products while you're tackling the new to wealth customers, where a lot of players are going with equity products for the same customer TG. Why fixed income products? Why so much affiliation to that particular segment in Yubi Markets as well as now in Aspero?
I think three. One is, our own background and DNA has largely been around debt, right? Largely been around debt, fixed income, I think to my mind is something which we understand well. And that's what has got us to the kind of scale we have been able to get in that business in the last 2.5 years. Second, I think there is already, to my mind, a significant play in equity and derivatives, right? I personally think there is no space for a new player to come into a B2C equity derivative space, right? I don't think a new player will have a right to win, right? Third is where you see today the Indian debt market, right? I think this is the market where you will now see infrastructure like ours really getting that debt penetration in, because a large part of the market was largely serviced by banks, right? And a lot of your money was also going to banks. Right. So if you look at some of the other developed markets, money largely goes to capital markets. Right. Why? Because the capital markets does not have a cost of fund. Right. Banks have cost of fund, and that's why sometimes your return on fixed deposit is always lower than what you will actually eventually get in a capital market instrument. So the thesis is the Indian debt market will deepen and will deepen over a period of time. Right. But again, going back to what we chatted even on loans and other parts. That's why we took the B2B2C play, right? We think that the markets have started deepening, right? And there will come a time where there is a right play for B2C, right? So, and I think that should happen over the next 24 to 36 months.
One thing which this reminds me of, you always, I think in one of the board meetings you had said this, you want to build Yubi as a company that outlasts all of us. What does that mean? What does it take to build a company that does that?
I think to my mind is, a lot of what I've also heard, over the many years, I think is largely think long term. But I think it's very difficult to think and act long term, right? Because your clients are at it, your, I would say, team is at it, right? So when you're building something, you're constantly trying to strike a balance between what your client wants, right? What your internal stakeholder, including employees, want, right? And sometimes the employee aspiration actually might be bigger than where the company is thinking of, right? And that's why you ending up taking a lot of shortcuts, right? But as far as we are concerned, we were very clear on three things. Given the space we chose, right? We were very clear that we don't have an option not to think long term, right? Because you are dealing with money, you are dealing with clients who are trusting you with a lot of inherent trust themselves. Second, you are dealing with very large clients, right? As I said, banks on the other side. And that's one of the reasons why, I have ended up putting a lot of skin in the game myself, and investing in Yubi over the last 12 months. Just because I want to give that comfort to our clients that, we are here for the very, 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 very long term, right? Because a lot of them are building, co-building, investing in infrastructure along with us, right? So given the space we chose, given where I see, I would say, credit/debt headed in this country, right? I think we are still scratching the surface. And I'm telling you, I'm not kidding you, 2007 when I started our first company, we were talking about that the debt markets are shallow and debt markets will deepen. And here we are, 17, 18 years and still talking about it.
Still debt market is shallow.
But now I think the time is right. Because every space, there is a timing. You saw that with payments, you saw that with, equity/derivatives. And you will see that with, I would say, debt and debt investment. Because that infrastructure, regulatory, to my mind, tailwind, right? I think the regulator has done a phenomenal job, right? And I can't thank the regulators, both SEBI and RBI, enough of what they have done, right? With the kind of regulation they have come out with over the last 12 to 18 months, which will definitely accelerate, where you see some of this headed.
Awesome. Over the last 15 years, you've done so much for the ecosystem. And just in the last 5 years, I think you've built Yubi into this giant fintech interoperable platform. I just can't imagine what the next 10-15 years could look like. Thank you again so much for this, Gaurav.
No, thanks a lot. Thanks a lot, AJ, for having me. And we are just getting started.
Yes.
Thank you.